Welcome everyone to Candlesticks. Hopefully you made it through the basics with a good amount of knowledge. Now we will start on real technical training. If you have any questions at any time while listening to this audio guide, feel free to visit us at tradesupportgroup.com, ask for a free consultation, or choose the package that you know you already want, and we will be able to assist you right away. Candlestick charts originated in Japan over 100 years before the West developed the bar and point and figure charts. In the 1700s, a Japanese man named Hama discovered that while there was a link between price and the supply and demand of rice, the markets were strongly influenced by the emotions of traders. As human thinking tends to be repetitive, you will notice many different patterns that are repetitive on the market with the way that traders psychologically think. Here we start with the Marubozu Bullish candlestick. This is a candlestick that has trended in one direction in a bullish state throughout one session, and it's closed at its high. Marubozu in Japanese means bald or shaved head, and this is reflected in the candlestick's lack of wicks. Marubozu is the name of a Japanese candlestick formation used in technical analysis to indicate a stock has traded strongly in one direction throughout the session and closed at its high or low price of the day. Notice in this slide, the Marubozu Bullish candlestick appears, and we have a strong uptrend afterwards. Here we have the Marubozu Bearish, the exact opposite of the Marubozu Bullish, as in it has no upper or lower wicks, and it is closed at the very bottom of its session with one complete movement. Take a look at the chart with the Marubozu Bearish. You can see that it's a very strong bearish run and indicates that likely this is trending in one direction. This isn't a guarantee, but you can see on this chart that a few hours later or a few sessions later, this candlestick and this chart pattern were continuing in a bearish direction. A hammer is a type of bullish reversal candlestick pattern made up of just one candle. It's usually found in price charts of financial assets. The candle looks like a hammer as it has a longer wick on the bottom and a short body at the top of the candlestick with little or no upper wick at all. On this chart, you can see the end of a bearish run and the beginning of a bullish reversal. The bullish reversal starts once we see three different hammer candle patterns show up. Take a look. Once we see one or two hammer candles at the very bottom of this trend, we see a strong uptick or a strong bullish rally, reversal in this case, afterwards. Hammers can be a very good indication of a strong reversal. So keep out an eye for these so you can notice the next time this trend reversal pattern may occur. Here we have the inverted hammer candlestick. This is the exact same thing as the hammer candlestick, only upside down. It's found at the bottom of a trend. Once you see an upside down green hammer, you will notice that there is a strong reversal pattern in most cases. While this is not a guarantee, it's a good eye to keep out on the market once you notice one of these at the bottom of a bearish run. Looking at this chart, you can see the upside down or the inverted hammer candlestick. This occurs at the bottom of the bearish trend and causes an immediate reversal in price. It's worth noting that a few candlesticks later, there is a test on the support line, which we will show you once you get one of our packages, in order to understand better where to place stop losses and take profits. As you can see, around 9 or 10 candlesticks later, there is a strong doji candle that presses well below the support line where it was for the hammer candlestick, but an immediate test bounces right back up and continues a bullish run. I mentioned the doji candlestick on the last slide. You may wonder what the doji candlesticks are. For one, a doji is a neutral candlestick. The doji shows indecision in the market and for the instrument and sometimes causes a reversal in the trend. You should note that you will use this candlestick in combination with an indicator to get a better idea if the signal is a correct one. The Doji neutral closes right in the middle most of the time with the same length of wick on top and on the bottom, and again shows neutrality in the market and indecision between the bears and the bulls. Gravestone dojis are candlesticks with a long upper shadow, or a long upper wick. They are formed when the open, low, and closing prices are all near each other. This type of doji is normally a bearish reversal candlestick pattern. In this chart, you can see two different gravestone dojis. The gravestone doji, being a bearish formation, is highly successful whenever it is at the top of a market formation. This signifies the end of a bullish run, which is where it gets its name from, meaning that the bulls' graves are there because they fought a hard battle and they lost to the bears. The Dragonfly Doji is a type of candlestick pattern that can signal a potential reversal either to the downside or the upside, depending on the past price action. It's formed when the high, open, and close prices are essentially the same. The Dragonfly Doji has a long lower wick and usually indicates a strong bearish resistance that can reverse a trend. A Dragonfly Doji can occur after a price rise or a price decline. The appearance of a Dragonfly Doji after a price advance warns of a potential price decline. A move lower on the next candle provides confirmation of this. If a Dragonfly Doji takes place after a price decline, this warns that the price may rise. If the next candlestick rises, this provides confirmation. On this particular chart, the next candlestick does not provide confirmation, but we do see a Dragonfly Doji. We can initiate a support line, and we can initiate a trade based on the tactics that we see available. A Doji star is basically a Doji neutral. It represents indecision from both bulls and bears, and it's also deemed as a continuous sign or a reversal since there is so much indecision. On this chart, you can see the stop of a bearish run with the Doji neutral. Notice the confirmation is with the bullish candlestick immediately after, and then a bullish rally. A four-price doji is simply a flat line. This is where it opens, the high, the low, and the close are all the same. This is the highest extent of indecision between bulls and bears, and this is normally not a good sign to get into a trade. It also depends on the current trend and what the indicators you are using as well also indicate. In this chart, you can see the indecision after the four-price doji shows. We started off in a bearish market. We have a four-price doji show, a small continuation on the bearish market, leading into a trend reversal to the bull market, and then back and forth afterwards. This is why it's not a really good decision to make to open a trade once you see a four-price doji. A spinning top is a Japanese candlestick pattern with a short body or small body found in the middle of two long wicks on each side. A spinning top can form at the top or the bottom of a pattern. Sometimes this is an indication of a pending reversal. On this chart, you can see a very strong bearish drive down with three strong bearish candlesticks. The next candlestick is the spinning top, which causes a reversal in the pattern, and as you see, a strong bullish rally. A morning star pattern consists of three consecutive candlesticks. This forms at the bottom of a bearish trend, with the middle candlestick being the morning star, and the third candlestick being the start of a bullish rally. In this chart, you can see that the morning star forms at the bottom of this bearish pattern. Just like any morning star, it starts from the bottom of the sky and it heads to the top. You can see that once this forms, we have a strong bullish rally. An evening star is very similar to the morning star, except that it occurs at the top of price swings. It occurs at the end of daylight, which is a move up, and before dark, whenever you see falling prices. This is sometimes a sign of trend reversal, especially found at the top of a bullish trend. In this chart, you can see that the evening star forms at the end of the bull rally. The candlestick before the evening star is a strong bull candlestick, followed by the evening star, and then a sign of the reversal confirmation of a strong bearish candle. The hanging man is a type of bearish reversal pattern made up of just one candle, and it's found at the top of price trends. It will have a long lower wick and a small upper body. The only difference between the hammer and the hanging man is the nature of the trend in which they appear. If the pattern appears in a chart with an upward trend indicating a bearish reversal, it is called the hanging man. In this particular chart, you can notice already an indicator we went over before. Notice that at the beginning there is a strong hammer candlestick that starts a bullish uptrend. At the top of this uptrend, we see the hanging man. After, we see a confirmation with a bearish sell-off. To recap and to make things a bit simpler, just remember a long upper shadow or a long upper wick. It may look bullish, but it hints at a bearish reversal. This shows the battle between bulls and bears, with the bulls pushing it up before the bears rally to close the candle at a more suitable place, thus resulting in a bearish trend. In this chart, you can see the start of a bearish trend. This is indicated by the long upper shadow where the price is at 114. Notice that this long-term downtrend ends up going to a level of 107. The long lower shadow indicates a major loss for the bears. This is the exact opposite of the long upper shadow. In this chart, you can see the end of the bearish run begin where the long lower shadow is indicated. This starts a huge bull rally from 107 all the way to 112. Obviously a very good long-term trade. Okay guys, this concludes our first section of our chart training, technical analysis. Hope you guys understood everything very clearly. Look out for these type of candlestick patterns and look forward to our next section. If you have any questions, visit us at tradesupportgroup.com. Check out our free consultation. Sign up for a package where you can have a coach training you live one-on-one. So if you have anything, let us know. We'll be more than happy to assist you. Subscribe to our channel. We are always producing helpful information for you guys. Take care.